The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 27th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We need to make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Call in right now, 877-927-6648. You can send me an email, steve@tfnn.com, and inside that heading, go ahead and put radio show question. And, of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on a terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 11 points at 21,397. S&P is off 5. NDX 100 is the one leading the charge. The downside, that and the semiconductors off about 1%. The NDX down 55. The semis off 14 points. Russell 2000 is mean and green, just slightly green, up by 40 cents out here. New York Stock Exchange is also green. Transports are also green. Volatility index of about 5%, so no big deal out there. Gold is flat at $12.46. Silver is flat at $16.57. Light sweet crude up 78 cents. Looks like that wants to head higher, just as natural gas does. Bonds look like they're ready to take a break and start moving to the downside. Leading the charge here to the upside, individual stock-wise, you've got CACC, Credit Acceptance Corp, up. Michiganders, that's up $5 or 2.5%. Chicago Bridge and Iron, CBI up, 32%. That is a big move for that stock. Chipotle is up $4 or 1%. SVB Financial Group up 4. Humana up 4. Signet Jewelers up $3. Darden Restaurants up 3. To the downside, it is Google leading the charge off $17. I suppose the $2 billion. Is it $2 billion, something like that? $2 billion in potential fines that the EU is trying to slap upon them. It's a tax. I say don't pay it. Priceline is off $10. Amazon's down 9. Coherent off 8. iRobot Corp, that's down $8 as well. Tesla is off 7. Of course, I want to look at what you want to look at. Let's first go take a look at the markets, what they're doing right now. If you take a look at the NQ, interesting as we take a look at it, today's going to be a telling day. Every day is a telling day, but today will be a telling day in that it's trend line, the one from the Trump bump out there, actually election day of 2016, that day in November. If you just simply draw a trend line from the bottom of that trading session, and then for our next touch points, we're pretty much using right around April 13th, April 18th, right around that area. And so this line can be moved up or down just slightly. You can see it is that trend line that is under attack as we speak. You've got Stevie's red dash line just a few points lower at about the 56.94 area. So you're about 57.17. So we'll see if we get a test and rejection of that area. If I take a look at an intraday chart inside of the NQ, by intraday I mean 30-minute chart out here, what we're going to see here, at least as of 1:10 in the afternoon, let me hit the update button, is price is moving lower, doing it with less relative energy out there. So the ping pong, the trampoline, is potentially in play out here. Now, we won't know if it's in play until we see the bulls rush in, but you've got price coming down to a trend line. So if they're going to rush in, they should do it sometime this afternoon. I don't care whether it's my show, if it's the Polar Bear show, or whether it's during Tom's show, but if they're going to do it, watch out. Don't think that it can't be done. Price is moving lower, less relative energy out there. You are in the fourth leg on the way down. And, as Basil will tell you, that's where you can start to see prices shift. So that's what the NQ, that's in essence what the leader of the pack is doing. If we take a look at trend lines, though, let's not stop there, because some of you say, well, Steve-O, I don't trade the NQ. I don't even get the feed of the NQ. Why are you so focused on the NQ? All right. For those of you that said that, just go take a look at the NDX 100 and take a look at its trend line. Its rising channel line is what we're looking at out here. And what you can see is that prices run right down into the bottom of the channel. If the bull is still around out here, which I suspect it is, this channel line will hold. It doesn't make a big difference if there is a slight push below it, but I just want you to know, because I love you. If you're here, you get my love, and I'm here to cover your back. And so right now, price is up against support. If you're short, just start tightening up those stops, because this could be as good as it gets. If I could do a Jack Nicholson impersonation, I would. Wasn't he in the movie As Good as It Gets? I think something like that. If he wasn't, he should have been in it. Now, if we go take a look at the, let's go back to the equity markets out here. Let's go take a look at the NQ as well. Give me a moment. Where is it? Should be like right in front of me. There we go. Now we're going to take this NQ chart here is showing us the 60-minute time frame. I don't see any support there. So the 30-minute, watching it get down to, so we know we're up against this trend line here on the weekly basis. You can see on this other chart, very right-hand side of my screen. If the sellers are really able to take control, if they're really to get the gusto going, price should fall all the way down into right now. You have to go with the 56.67. Yeah, I'd have to say 56.67 would be about where it would head to, and that is the bottom of its daily profile, or profile, whichever it is you prefer to say. But at this stage here, price is right at that point of control. There's lots of buyers and sellers lined up right there. They believe that that is the fair value of the NQ on a daily basis as we speak right now. Let's go take a look at what's going on inside the currency markets. They're making big moves out here today. The U.S. dollar index, it's down 76 cents out here. That's a pretty big move, 8/10. It would really be down had it not been for the yen out here. Let's go take a look at the yen. We've been calling for the yen to move up into the 112.55-ish range. Well, it finished that move earlier today. It got to 112.46. Remember, you and I use some of these numbers as guidelines, not necessarily as exact to the point. And that does not mean, we talked to you about this yesterday, we talked about the continuation signal. If you take a look at Japanese candlesticks, there's really only two true continuation signals out there. One's called the rising three, and the other, yes, you're right, it's called the falling three. You got the rising three yesterday. Price then rose to where it should. Now, there's a descending trend line, so it could extend a little bit further. That's really why gold is struggling. It is why bonds are struggling. But if, in fact, this turns from here, that could be good for Goldilocks, could be good for silver, could be good for T-bonds. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, so Janet writes in and says, Steve, I heard the end of your segment on Tom's show yesterday. Would you be kind enough to go over those charts that you did during that show? Yeah, why not? It's kind of a slow market out here, so why don't we do that? For those of you that caught it, I'll apologize for the repeat. However, what I'll do is I'll sprinkle it with some things that I didn't actually get to during that segment out there. But first we've got to go to Suzanne in Canada. Let's go to Suzanne. Suzanne, thanks for calling. Thanks for holding. How are you today?
Thank you, Stu, for taking my call. I'm doing good. How are you?
Very good. Thanks for asking. What part of Canada are you from?
Windsor, just across Detroit, just across your former residence.
Absolutely. Absolutely. How's the weather there today?
Oh, very nice, fresh, pleasant, sunny.
Oh, perfect. I talked to a buddy of mine, somebody I went to elementary school with over the weekend, and he still lives in Detroit. He tells me things are just booming over there. Do you ever go over to Detroit?
It's getting better. Yeah, my daughter is in Wayne State University.
Okay.
And she likes it. She says it's very safe and nice, and things are different than they used to be.
Oh, that's great. That's great.
That's a good thing.
Good.
Steve,
Now go ahead.
I have a question. Would you go in with NUGT at this point?
So I'm going to first take a look at the GDX because it's a little bit easier to get a message from the non-leveraged vehicle here. And if we take the mining equities have held up really well. And I mean really well. Today, as an example, the pullback, if we're going to call it a pullback, 22 million shares out here, and it was 47 million shares where we had a little bit of a breakout on June 22nd. And we know that you've got a directional issue. How long are you looking at holding this trade, Suzanne?
I was kind of hoping that it would go to what's the GDX right now? 23. That big bar there, top of that big bar. 23.
Well, in the case of the Nugget, you'd be looking at about $36, and for the
Yes,
GDX.
yes.
Yeah. Okay.
23 something there.
Let's do this here. Tell me are you going to base any of your decision based on what gold is doing, or should I just focus on just the mining sector itself? Tell me kind of your thought process on, when you take a trade inside the mining sector, do you pay attention to what gold or silver might be doing and look for that as a confirmation?
Not silver, but I watch gold, and then the dollar and Japanese yen. I was at one point.
Okay, all right. So let's
particularly on GDX. Like I was looking at GDX, and it looked like it tested yesterday's drop. When it dropped yesterday.
Yes.
And it tested below, and it kind of looked like it would have a bounce.
Well, here's what I would say to you. So just quickly with regard to gold, if gold can continue to trade above 1245.70, then I can see where going ahead and taking a trade in the GDX, don't back up the truck or anything, would be an okay thing to do. And part of the reason that is the bottom of its 30-minute profile level, and both its point of control and the bottom of the box are exactly the same. That should be strong support for gold. So if that can hold, then you should be okay. If we take a look at the GDX specifically, I'm going to pop this chart up here on our screen for you. The level that you want to see that continue to trade above is 2240, I believe is the number. Yeah, 2240, which is where it tested today. And that's my little red line that helps me to understand if the price oscillator, the very bottom panel, the difference between a 39 and 19-day exponential moving average is still rising. So if price is able to stay above 2240, then that would support going ahead and entering a trade. Now, you could go ahead and take the trade right now, watch these levels. If they fail, go ahead and take a small loss and come back and reassess tomorrow, as an example, or the next day. But those are price levels that you really want to see price stay above in order to say, okay, I'm on the early side of this trade out here, and you go forward. Because, certainly the yen, for the most part, has hit the target that it needed to, where it could turn back. Just trying to put all those together for you. We don't have any kind of reversal signal as we speak just yet. And if we don't get one, it continues to put price pressure on gold and really the mining equities. So that's how I see it, in just taking a look at really short term with regard to what gold is doing, and then the GDX on the daily basis, a level that it needs to hold above.
Very good. Thank you so much.
You bet. Thanks for calling. That was Suzanne in Ontario, Canada. What a sweet spot. I, as a kid growing up, used to drink those Bredors and Molsons and Labatt's and all that good beer. And, of course, that gave me that beer belly, so to speak, that I'm trying to shake. Okay, the Dow is up off 4. The S&P is down 5. We've got 2 minutes, and it doesn't really make sense to go into that presentation from yesterday. So we'll do that at the bottom of the hour out here when we get back from the next break. In the meantime, from a daily perspective with regard to gold, though, folks, what you really need to see gold do in order to really give you a nice bullish message out here. Let me try to get down to that level. Oh, my goodness, I probably should have done it off screen, but we're doing it here. I've got to just click and click and click and get down to the – I grabbed the wrong. That's a continuous contract, so that sort of works, but it doesn't really work. Now we got to let this thing populate. Okay, I'm going to get the actual contract here. Give me a second to get there. Okay, and so the number, it's going to be Stevie's red line that you need to see price get above. Looks like it's about $12.56. You're, $10, $11, $12 short of that. I'll give you the exact number out here. And Suzanne, this is what you would also be watching. Let's say that gold bounces from here, the GDX bounces from here, gets up to 1256.20 and is not able to take that out. That would be a good indication of really tightening up your stop, or maybe going ahead and taking your profits out here, because gold gave us a nasty bearish reversal signal yesterday out here. And if it gets above that, then I would say, hey, back up the truck. because then what we should see is a move back to the 1295, 1300 area, maybe even an A to B equals CD to the upside out there. So that is on gold, and no bullish reversal signal yet, I don't think. We have 5 minutes to go. Is it going to be a hammer? And we might get a hammer candle in the next 4 minutes, and that will be on the NQ 30-minute chart out here. And if we do get that, that tells you that support held. And if you're short and you're an intraday trader out here, pay attention to this. This is worth the price of the show, and it's worth a lot of extra dollars in your pocket, because actually it'll become turnaround Tuesday. Yeah, but we don't have that bullish reversal signal just yet. But it may be coming to a screen near you. At a minimum, if we got the hammer candle, it says 57.38. So now you have to assess whether or not you want to go ahead and take that kind of bread off of the table. Not a big deal, but you get above that, it's back up to the 57.85 area, something along those lines. We'll take a look at it when we get back from this break. Then we'll go take a look at those longer-term prospects for market. T-Road, TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. No hammer on the 30-minute chart here for the NQ, so you got to wait for the next session. That would be 2 p.m. So we'll go ahead and take a look at that before we close out the show. But for Janet, back to yesterday's slides, information that I shared with Tom. Let me go right from here. So my question, and this was a snapshot. The Dow isn't really doing a whole lot more today, but my question was: is the Dow making a major top? Can you take a look at this chart? Which essence was of yesterday, not much different from today, and answer the question, is the Dow making a major top? Well, let's just kind of go through it. You see, when the Dow makes major tops, it creates one of my price relative strength divergence patterns. Exactly what you and I were looking at on this 30-minute chart here that you're focused on, you're paying attention to. We know price is up against support inside the NQ. If there's a bullish reversal signal, bullish engulfing candle on this session here in the next 29 minutes, and the answer is going to be, okay, it has formed a bottom. If we don't get that, and then the answer is no. Price can still continue to move lower out here. Well, it's the same exact pattern that exists at every major market top inside of the in the indices out here. Certainly in the Dow, we're going to take a look at the Dow because you go back moons ago, many moons ago, and you can see that pattern. That's exactly what took place back here at the 2007 top. If you take a look at what occurred in 2000, and those of you that went ahead and watched that 30-minute workshop that I did that was on your members page out there, you saw all of this, and you saw each of the bear markets and the pattern that was present. You saw two patterns that were present during that time period out here. And when the Dow makes minor tops, minor type tops, it also makes the same type of pattern. We just looked at it on a 30-minute chart. We always pay attention to it, and you stay inside your time frame horizon that the pattern is playing out in. Well, here in August 2016, when the Dow made a bit of we'll call it a minor top out here, that pattern was present. So is it present now? The answer is no. It is not present in the Dow. So then that doesn't mean that price can't pull back. I'm not saying that at all. But it's just there are many people out there that I hear. You may say you don't hear them. I do, because I read a lot and I listen a lot and watch a number of different shows out there, and I see a lot of people saying short the Dow, go long emerging markets, to all kinds of major tops of monumental proportions, all this type of stuff that is supposed to take place now or last week or next week or should have taken place over the last year, or valuations, or you name it. It's pretty thick with regard. And people talk about no fear out there. Are you kidding? Go talk to your neighbor or everybody else. Are you going to go ahead and put all your money, if you just came into a big cash hoard, into the market right this very second? Are you? Answer that question. Are you going to do that? And if the answer is no, then must be because there's some fear out there. So don't start getting the VIX index and the fear thing. That's another story. But here's the deal. When a bear market gets going to the downside, it doesn't let you out. That is the actual signal. That is what a bear market does. It does not give you a second chance. It doesn't even give you a 1.5 chance. When bear markets get going to the downside, that's it. Sayonara, adios. See you later. Look at back to the here's the 1929. Take a look at the 1929 market. It simply gets up to the high. That's it. Lets loose. Right? That's not even the big time period to the downside. And I don't have all the other patterns that are out here. Just a clean chart, just so you can see, in essence, it rings that bell, and then it moves lower. There's no testing and retesting and testing and retesting out there. Take a look at here back in 1946, where the Dow went ahead and rang that bell up at the highs. It does not let you get out. I mean, it lets you, but doesn't let you get out because you've come back and you've retested it. Take a look at back in 1966 out here and the high. Doesn't let you get out. There's no sideways consolidation, distribution, all that kind of stuff at the tops inside these markets. 1973, the same thing. You can go back and take a look at one after another after another. 1987 looks a lot like 1929, at least with regard to not letting you get out of the market. It doesn't give you that so-called second chance. So spotting it is really important so that you can really figure out. That's why I did that workshop for each of you out there, because it's really important to be able to spot it, understand when those signals are present, just simply so that you can be cautious. 2007, the exact same thing out there. So bear markets, real bear markets, they just ring that bell once. They ring it once out there. And if we take a look at what's the Dow doing right now, in essence, go back to that chart from yesterday, we're back up here testing the highs. That's not the pattern that is associated with the so-called major bear markets out here. It's just, in the S&P 500, for goodness sakes, this thing has been moving sideways for 3 weeks. It's moving sideways again today out here. That is not what bear markets look like. Instead, this is really building its next base out here. It doesn't mean price can't move down to the bottom, even pull a little bit lower out here. But the point is just simply, I'm not going to be careful about absolutes, Pete. I don't need to. They don't need to. This is the way that bear markets form. They don't give you second chances out there. It just doesn't happen. The Russell 2000 has been testing the highs for the last 3 months out there. You got to go back and take a look at each and every bear market, and the mere fact that it just simply doesn't let you out. New York Stock Exchange, no top here. This thing's been consolidating for the entire month of June. It's going to continue to consolidate probably through the rest of this week out here. And you've got that annual seasonal cycle. And during a time period, June, really May through now yesterday or Friday, Sunday out here, really what the market should have been doing is, in fact, at least moving much lower than it has. And the mere fact that it hasn't, it says to me, boy, this is a lot of liquidity in the market to just simply go ahead and fend off any kind of move to the downside out here. So maybe the next significant top is going to come, folks, when the NDX 100 gets that 8,500 level. Hey, you're at 5,800 as we speak right now. You and I, we know these consolidation patterns, how to play them. We'll have a different story out there if, in fact, we get back below the 4,500 area. But until we do, the pattern that is in play is one over the long haul, headed up into the 5,800 area. Tom asked me the question, well, when would it go up there? And I didn't really have an answer. I don't want to focus on time, but I know many of you could be sitting out there saying 8,500. Are you kidding me? I know somebody is. Well, that's just really a simple measured move of that consolidation breakout. And if that's too lofty of a goal for you, which for many of you it is, how about if we just say that by the end of October, early part of November, that we're looking at a 64.69 out here. You see, in the last 4 months, and this is the horizontal trading ranges, this is a monthly chart for the NDX 100, it was able to accomplish the 56.68 to 57.69 level in just 4 months out there. So and there's an A to B equals CD that gets you up to 74.62, maybe even higher than that. But it looks like 64.69 at least during the next 4 months. Maybe even higher, maybe even 71.69, maybe 74.62. We'll take things one moment at a time out there. And some of you say, but the Federal Reserve is raising rates. The stock market likes rising interest rates. It certainly did in 2004 to 2006 when the Fed went ahead and raised them basically at every meeting out there 17 times in a row. The S&P 500 still was able to increase by 12% out there. We haven't even gotten to the goodies. We'll finish it up. We'll wrap it up pretty quick when we get back from this breakout here. Steve Rhodes with TFNN.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Now everybody's getting in on the game. The ES didn't like the fact that the NQ was moving lower with less relative energy, so it had to get in on the game as well. You can see that little black line that is drawn. Now, you got to have the bullish reversal signal. That doesn't mean that it's going to happen at 2 o'clock or 2:30 or 3 or at any point in time until the cavalry arrives. But you've got that pattern where price is moving lower, doing less relative energy. That's got to get the hair on the back of your chinny chin chin. No, back on the back of the hair on the back of your neck's got to start standing up. The YM, the Dow Equity Futures Contract, is doing the same. That answers the question, hey, why do we focus in on these equity futures contracts versus the ETFs? And the reason is because it's all about price discovery, and these time frame charts give you and I the exact feedback as to what it's doing, when to be able to identify reversals out there. We cannot get that from the 6.5 measly hours worth of trading inside of those ETFs out there. I've tried. It doesn't work. So back to the longer-term view out there, right? Longer-term view, we were just talking about, hey, for those of you that believe that interest rates are bad and that's going to derail the economy, it's going to derail the S&P 500, the Dow, the stock markets out there, it's not. It just simply isn't. The market digs this. It digs this kind of stuff out here. And then let's not forget about repatriation out there, because the last time that we had the American Jobs Creation Act didn't actually generate a whole lot of jobs out there. But what it did do in the 2004-2006 timeframe is then moving the stock market up by 41% during that period that took us about 4 years. 4 years really from the one bottom to the next top out there. And so that's with regard to repatriation. If we take it, long term, does that take us out to 2020 out here, that same time period? And we're not going to worry about that. But here's the deal. The reality is repatriation of cash this time is 7 times the amount of the repatriation that was done, or potential repatriation that was done back in the 2004 timeframe. And that one got a 40% move when all was said and done. This is 7 times as large as that repatriation. You don't think that this is going to have some kind of impact on the market out here? Well, that's okay if you don't. And then you and I haven't even really talked about tax cuts, have we? We're going to get tax cuts. There's going to be tax cuts. If there is tax cuts out here, And you can take the side, I don't believe any of this is going to happen. I'm going to load up the shorts up to my eyeballs out there. You could be right. There's always two sides of the trade out here. I could be just dead wrong. All the research I've done, everything that I've done is just simply just wrong. And if that's the case, and we don't get these tax cuts, we don't get repatriation, we don't get this, we don't get that out there, okay, but if we do, what you should know is what has the market done. Now, we don't have a lot of examples, right? If there's any tax cuts that really have gone on over time, it's just a shifting of some of the brackets out there. But this time, it's more like the Kennedy, which really wasn't after he was assassinated. Obviously, it wasn't until Lyndon Baines LBJ was able to go ahead and put that into legislation back in February 26, 1964. But for the next 2 years, the stock market went ahead and rose by 26%. It was fueled by those tax cuts. Tax cuts are great for the stock market. If you are a stock market trader, you need to be out there pushing for these tax cuts out there. And who isn't a stock market trader? Let's face it. It is all BS. It is all before Steve, where people are saying it's only good for the rich. It's not good for the poor. Really? You don't think that whose money is in who has the majority of money inside the markets out there as a group? Who has it? Pension funds. Pension funds are the largest shareholder, so to speak, and the largest beneficiary of the market. So it is good for everyone out there. It's not good if you don't have a retirement plan, but if you do, now is the time to start with a market that is going to move higher out there. And hey, you may say those tax cuts don't matter, but if you take a look at the Reagan tax cuts out here, right? Those being 1981, the Economic Recovery Tax Act. Don't just because it says Economic Recovery Tax Act out there, was Recovery Tax Act that was put in on August 13th, 1981. There was basically a meteoric, a huge rise. 207% is what the Dow was able to gain over a 6-year period of time out there. So tax cuts, folks, they are good for the stock market, and they are good for all. And of course, you might be saying, but what about the Fed, their balance sheet and all the cash they printed? I just got a text on my phone that says, Yellen, banks very much stronger. Another financial crisis not likely in our lifetime. Do you believe her? Not another financial crisis? Not like the one that we had in 2008. There might be another one. But here, what she knows, and she's not saying, is that all that cash that was printed out there, it was just a shell game. The majority of it was a shell game. You might say, what do you mean? Well, let me go show you what I mean out here. Let me see if I can pull up this. Let's go take a look at this. Let's take a look at this chart right here. Oh, that's not it. Where is it? Where did I put that? Tell me it's out here. Tell me it's out. Here we go. Let's take a look at this. Here is the you can grab this data, folks. This is not brain science out here. If we take a look at the excess reserves of depository institutions, if you take a look at, in essence, what the Fed has done, what they've created with all the banks, and we go back to 2009 out here, and this is in millions, the assets, the Fed has increased their balance sheet by what, $3.5 trillion? You know where $2.5 trillion of that is? It's inside the banks. It's never. Why do you think there is no inflation? Why is there no inflation? I mean, everybody, hey, where's that money is being printed? You're assuming that it's getting out there. It's not getting out there. It's just gone from the right hand of the central bank to all of its members and depository institutions that are out there. That's where now when and if this money starts coming out, then okay, then that's something else to look at. But here's where the money is. This is why Janet Yellen is saying, hey, the banks are very much stronger out there. Yeah, exactly. There's no until this money gets out there and starts chasing all kinds of assets out there. There's no real major type of inflation, but yeah, they are. Her statement is dead on balls accurate. It was nothing more thus far than a shell game. You can get this. You get this up to date. And the latest figure out here, I think, was in April was up to 2.1 billion. So it's come down just a bit. It was up as high as 2.67. Back in September 2.7 in August of 2014 out there, and then you take a look at repatriation, and you take who's buying the bonds and things of that sort. If you were running Apple, if you were running Apple, what would you be doing with all their cash? Well, I can tell you exactly what they do with all their cash, at least what they have been doing since April. They are their own Federal Reserve, for goodness sakes. You probably didn't know this. $147 billion in corporate securities, $21 billion in mortgage asset-backed securities out there. They are just a mini Federal Reserve. Here's where all their money is parked. U.S. Treasury securities, $53 billion out here. You just take a look at where their money is at, between CDs, between corporate securities. These are good. Why do you think they're in corporate securities too? Their biggest numbers in corporate securities. Why? All grade A corporate securities. Why? Because there's never been a corporate security grade A that has ever failed. A little different than some sovereign debt out there, but who's talking about debt these days? That's why the markets are headed higher in a big way, folks. Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 47, S&P is down 11 points. Let's take a look at some individual stocks out here. Let's take a look at Apple as an example, down about 1% to $1.37 out here, pulling back with majorly light volume out here. In fact, you could get a test and rejection of its most recent swing point. That swing point being June the 16th out there. You'll watch the high of 144.50. If you close above 144.50, and then you'll have a test and rejection with lighter volume. That says you bounce all the way back up to at least the top of the TAS daily profile level 147.54. Volume as an example right now, 154 in the afternoon. You're talking about 13.8 million shares versus 50 million shares that was generated back on June the 16th. Now, if you close underneath 144.50, then that says that price can easily get down to the 143.53 level. But volume is super light inside of Apple. Let's take a look at Chicago Bridge out here. What is moving that up 31% out here? What is moving that? Court vindicates Chicago and Bridge. Okay, so it was a court case that's out here. Boy, you got some big buyers in here. 1.31 million shares so far. Chicago Bridge had looked like their bridge was falling down, but that is no longer the case out here. This thing with big volume, is there anything else on Chicago Bridge that you and I can look at to suggest that that was a bottom out here? CBI. Let's see if we can get this thing populated before we're off the air in 2.5 minutes. Out here, we'll just look for certain pattern. Is this thing moving lower, less relative energy? Oh my! How do tops get made, and how do bottoms get made out here? The same thing. So you now have you can now see you've got this wide range on a weekly basis. Let's just change this to a weekly chart out here. The week's not over; it's only Tuesday, for goodness sake, Steve-O. But hey, you got a TD9 count out here last week. So price, if Chicago Bridge is able to, CBI is able to get above Stevie's red line on the weekly basis, that's 1968. The change in trend will be set for Chicago Bridge. What does that take you up to? Well, it's at least going to take you up to the last gap, the first gap. Its most recent gap, I guess, is the way that I should say it. That takes you into the May 9th area, around 27.42 to 28.93 or 18.97 as we speak right now. Let's take a look at, what else should we really look at? Let's take a look at Google. How bad is Google getting hit today, considering that you got the EU coming after them for $2 billion out there, just simply a drop in the bucket. And the prior swing point on the move down was 4.2 million shares. Do sellers really give a whole heck of a lot about the $2 billion? The answer is no. Light volume pullback inside of Google. That's 1.3 million shares versus 4.2. Hasn't really tested anything yet. Well, it's testing, I should say, that entire swing point, which runs from 936.79 to 968. So while we know is that price is pulling back with light volume, that is inside of Google. Priceline. Amazon. Let's go take a look. What is the amazing one doing out here? And that's moving into a little bit of a sign of strength. Now, that sign of strength took place inside of Amazon on June 16th, 11 million shares to the upside. You're backing down with 2.3 million shares. Hey, if the sphincter muscle is getting a little bit tight right now, for those of you that are short and short up to your eyeballs, there would be good reason here. You've got price moving lower with less relative energy. And now when you take a look at the conviction behind the move, hardly any conviction compared to the conviction that I gave you during those last two segments. Well, folks, our time has ended for the day, but stay tuned. It's Terrific Tuesday. That means our terrific polar bear, David White, is up next. After that, Tom O'Brien from 3 to 5, and then after that, Andy Heck to take it on home. Have a great Tuesday. We'll see you on wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.